Lab price prediction is now at a critical decision point, and one reaction could decide the entire setup. The main level I am watching is the point of control, or POC, near 7.997 cents, with the broader battle zone extending toward 8.168 cents. This is not a blind chase setup. We need confirmation from price action before deciding whether LAB has a real opportunity to move higher or whether sellers are preparing for another move lower. For the short scenario, the first downside objective is around 7.87 cents. However, if LAB reclaims approximately 8.105 cents, holds above that level, and continues closing strongly, the bearish idea becomes invalid. In that situation, there is no reason to force a short trade. The market has to prove the direction before we take action. The liquidity map being used here provides estimated levels, not a live order book. My confidence in this setup is around 72 out of 100, which means the structure is interesting, but there is still enough uncertainty that patience is extremely important. The POC near 7.997 cents is the decision level. If LAB accepts above this area, bulls could get a real opportunity to push toward the next resistance around 8.105 cents. But simply moving above the level does not confirm a breakout. I want to see price build above the area, pull back in a controlled way, hold the retest, and then continue higher. That sequence is important because the first move above resistance can easily become a liquidity sweep. A candle can quickly move above the level, attract buyers, and then immediately fall back below it. That would be a rejection, not a confirmed breakout. On the other side, if LAB reaches the POC, gets rejected, and continues producing lower highs underneath the decision area, sellers could regain control. In that case, the nearest downside magnet is around 7.87 cents. This is the first area I would watch for a reaction. But remember, 7.87 cents is a technical objective, not a guaranteed destination. If LAB starts moving toward that level with weak selling pressure, I would rather wait for confirmation than chase the move late. The current structure is mixed, with support around 7.87 cents and resistance around 8.105 cents. Volume is also elevated at roughly 3.9 times the recent average. That tells us participation has increased, but high volume alone does not tell us which side is going to win. We need to study where the volume appears and how price behaves around the important levels. If we see strong volume while candles finish near their highs or lows, that can indicate real participation. But if we see large wicks with fading volume, that can represent a liquidity sweep or exhaustion. This is why I do not want to make a decision based on one candle alone. The recent spot market snapshot also gives us useful context. LAB was showing approximately $11.4 million in 24-hour spot volume and was down around 3% over the previous 24 hours in the referenced snapshot. I use that information to understand participation, not as an automatic buy or sell signal. A coin can have millions of dollars in volume and still move sharply in the wrong direction. That is why the chart remains the main source of confirmation. Now let's focus on the bullish scenario. If LAB reclaims 7.997 cents, holds above the POC, and then pushes through 8.105 cents with strong follow-through, the bearish thesis becomes much weaker. Ideally, we would see a reclaim, a controlled pullback, a successful retest, and then expansion. That is much stronger than buying the first green candle. The market needs to prove that previous resistance has actually become support. If the retest holds and buyers step back in, the probability of continuation improves. But if LAB breaks above the level and immediately falls back below it, that would be a warning that the breakout may have been a trap. For the bearish scenario, sellers need to defend the POC, reject the reclaim, and continue creating lower highs. If the reaction low is then lost, the downside path towards 7.87 cents becomes more relevant. The invalidation is also important. Around 8.105 cents is the key area where the bearish idea should be reconsidered. If LAB reclaims that level and continues closing above it, sellers are losing control. At that point, moving the stop higher simply because you want the trade to work is not risk management. If the thesis is wrong, the trade needs to be closed or avoided. There are really three possible outcomes from here. The first is acceptance above the POC. That would give bulls a chance to continue toward the next resistance. The second is rejection below the POC. That would keep the downside scenario alive and put 7.87 cents back into focus. The third is unresolved chop. If LAB continues moving sideways between these levels without clear acceptance or rejection, there is no reason to force a position. Sometimes the best trade is no trade. Liquidity is another reason to remain patient. When price sits between two major liquidity pockets, the first move can often be designed to trap late buyers or sellers. The cleaner setup usually appears after one side gets swept and price shows whether it wants to accept or reject the reclaim. This is why I care about reaction quality more than simply predicting the next candle. We also need to consider the wider crypto market. LAB does not trade in isolation. Bitcoin is an important risk filter. If BTC suddenly breaks down, LAB can lose its local structure, even if the chart initially looks bullish. On the other hand, if Bitcoin and the broader crypto market remain stable or move into a risk-on environment, LAB may have more room to follow through. Derivatives also matter. Funding, open interest, and liquidation clusters can help us understand whether leverage is building around the current level. If LAB remains stuck near the POC while leverage expands, the risk of a sharp squeeze can increase in either direction. For the short setup,